Today, Melanie and I will talk about the benefits of VA loans, along with myth-busting some common misconceptions.
It's time for Realty Tuesday with Cheryl and Melanie, keeping you informed on all things real estate.
A VA loan is a mortgage loan program offered by the Department of Veterans Affairs to help active duty military personnel, veterans, and eligible surviving spouses purchase homes. The VA loan program is a great program. My husband served in the Navy, and we used a VA loan to purchase our home.
Hi, Cheryl. One of my favorite types of loans is a VA loan. One of the greatest things about VA financing is the borrower can put zero down. Other great things about the VA loan program are that the underwriting criteria are a little bit different than for other loan types, which actually benefits the borrower in helping them qualify. VA interest rates are usually a little bit lower than conventional interest rates. It really is a tremendous benefit to a buyer to be able to use their VA loan, especially in this area where we live, where there are so many currently active duty, prior military, or retired VA buyers in the buyer pool.
Another great benefit of a VA loan is that it typically does not require private mortgage insurance. PMI is usually required on a conventional loan when the borrower's down payment is less than 20% of the home's purchase price. But since VA loans are backed by the government, they don't require PMI, which can save borrowers more money on their monthly mortgage payment. Melanie, can you share with us the documentation someone would need to apply for a VA loan?
That's a great question. Most of the documentation that's needed to qualify for a VA loan is the same as any other loan. We need a current pay stub or LES, 2 years of W-2 forms, current bank statement. But one of the things that we need for a VA buyer that we don't need for other buyer types is their certificate of eligibility, which we get from the VA that tells us they have earned their VA entitlement. This is a document that, as the lender, we request from the VA. We sometimes may need additional information from the VA buyer, such as DD 214 or a current statement of service to be able to get their certificate of eligibility. But beyond that, the basic documentation that we need for a VA borrower is the same as we would need for any loan type.
I think one of the most common misconceptions that I hear about VA loans is complaints about the appraisal process. I actually prefer the VA appraisal process. One of those reasons is because of the Tidewater initiative. If an appraiser has concerns about the property's value, they can initiate the Tidewater process, allowing open communication between us and the appraiser and the lender. And this collaborative approach enables the sharing of valuable information such as comparable sales data to support the property's value. I've had experience with this firsthand, and I know as a listing agent, I was super grateful for the opportunity to provide the data ahead of time to the appraiser, and my seller also was super appreciative of this process, and it worked out really well for everybody involved. Also, if the initial appraisal comes in lower than expected, lenders have the option to request a reconsideration directly through the VA. This means they can bypass the appraiser and expedite the process, potentially saving time and avoiding unnecessary delays.
I've successfully done this many times in my career. And if the VA comes back and agrees with our comps and assigns a higher value to the appraisal, that's the value that we go with. I find that there are really a lot of misconceptions about the VA loan. From the buyer side, a lot of people don't realize that they can use their VA entitlement more than once, or even have more than one VA loan at a time. From the seller side, there seems to be a belief that the seller is responsible for paying all of the buyer's closing costs on a VA loan, and that is just not true. The VA will allow the lender fees plus the escrow fee and certain other fees such as doc prep fees or notary fees to equal up to 1% of the loan amount. If the average purchase price is $500,000 to $600,000, that means 1% is $5,000 to $6,000. Now, there used to be a time when it was standard practice for mortgage lenders to charge a 1% origination fee, but most lenders don't charge that amount anymore. company I work for charges a processing fee and an admin fee that equals $1,590, $1,590. The escrow fee is typically split on any transaction between the buyer and the seller. And in that price range, I would expect the escrow fee to be about $1,200 to each side. So if we add $1,200 to that $1,590, you'll see that we are still well below 1% of the purchase price for this scenario. As long as those fees equal less than 1%, then it costs the seller absolutely no more to accept a VA offer than any other financing type. As always, everybody's situation is unique, so if you have questions or would like to explore whether VA financing is going to be best for your situation, please feel free to reach out.
Thanks, Melanie. Everybody stay tuned for the month of March as Melanie and I discuss different loan programs. Have a great week.